Okay, Mad As Money team. See my alarms going off over here. It is time for the Micah Yo Show. If you want to participate in the Micah Yo Show, please head on over to the Strategy Talk room so that we can get to business there and that we can respect the people who are actively trading in the main room. So I will see you guys in the Strategy Talk room. Bremster, what's up, man? Good morning. Mushu, I wanted to take a second and congratulate you, Mushu, on your success. I saw the post yesterday. I had already stepped out of the office, but I just wanted to let you know that I've noticed a big improvement in many of you guys, but Mushu, you're one of them. And, you know, your P&L curve is a testament to that. So great job to you. You're obviously tracking your trades. You're staying disciplined, and it's really cool to see. So great work there. 1337, Cruz, Punch Drunk, Stoneleaf, Opro, Techie Trader. What's up, guys? Miko, what's up, man? MRH, nice to see you again. Okay, guys, so I want to talk about a few things. I have a couple things I want to make note of in the market. First of all, May 16th. The famous saying, sell in May and go away, right? We're seeing that. We're seeing that here. We are seeing a lack of range. We're seeing a lack of volume. There's not a whole lot of opportunity across the board. So this is where summer can be very dangerous. And why do I say dangerous? Well, in a month like, say, December or January, where there's a ton of range, a ton of liquidity, there's also ample opportunity that comes with that, right? So we don't see that in summertime. Why is that dangerous? Well, you may only have 1, 2, 3 good trades a day. You may have 0 good trades a day in your edge. So what happens if we start FOMOing, if we start forcing things that aren't there, if we start making mistakes outside of the game plan? We're not going to have those good opportunities in abundance to recover. Okay, and that's why summer trading is very problematic for people who, well, for really all of us, Like as a general guide, as a general rule, summer trading sucks across the board, but it especially sucks if you have a problem following the game plan and following the rules. Okay, and that's why. So there's a whole lot of opportunity in months where there's a lot of range and liquidity to make back a mistake, if you will. Okay, now I'm not justifying any bad trading and saying that, oh, you could just make it back in winter, and that's not what I'm talking about. Okay, there's no justification for bad trading at all, but I'm just being real here. The opportunities are in abundance in months where there's volume and range. And there's a little bit more wiggle room is what I'm going to call it. I'm going to call it wiggle room. I'm not justifying bad trading, but I am saying in summertime, you really have to dot your I's, cross your T's, because you're not going to get a lot of opportunities to make back a FOMO trade. Grego, thank you for the enthusiasm. It's great to see you. We have a full house. We have a very full house. And I just want to take a second and thank all of you guys for being here. The Micah Yo shows are something that I wanted to do, to put on YouTube, to put on Twitter for people who can't afford a chat room or work a 9-to-5 and just can't participate in one. So they can kind of see how we do things here. They can kind of see the state of the markets as I see them. Remember, this is just my non-professional opinion. Okay, I'm not a professional trader. I'm not a guru. I don't have all the answers. I'm on the same journey that many of you guys are on, but I may be a little bit further along on this road than some of you. And I run into people sometimes that are further along on this journey than I am, and I pick up things from along the way. So do not consider this to be any kind of investment advice or gospel or set in stone or anything like that. It's not, because I make mistakes every day. And the Micah Yo Show has actually been really great for me as well, so that I can stay in a state of objectivity and continue to get my ideas out and, kind of speak them out loud really helps sometimes. When we write things down or bring things out into the open outside of our minds, it can be good for identification and things like that. So let's kick off the day with BYND. Of course, BYND is the flavor of the day. Okay, we all knew that. We all knew that we were looking for a continuation move on BYND. Not necessarily to the long side. Some people are speculating that it's going to roll over, right? I see a lot of people saying, everyone's cracking jokes. I mean, when you see a stock like BYND, you really have to be experienced as a short seller to survive a stock like this. And I'm actually very happy in my own trading that I have not gotten squeezed on BYND. And believe it or not, that's because I've been getting squeezed for years. I was like the king of getting squeezed. Got squeezed again. And keeping a journal and identifying where stocks are likely to start trapping has been totally game-changing for me. So, of course, that doesn't mean that I nail the short, okay? But that does mean that I'm not getting squeezed like I was in 2017 was a good example. 2017, make a lot of progress, boom, a squeeze would wipe out a week's worth of gains. A lot of progress, boom, a squeeze would wipe out 2 weeks worth of gains. And then I'd go on a big win streak again. And I started to be like, man, if I could just correct this issue, I could keep more of my bottom line. And I don't want to say that I fully corrected it, but I mean, I still do get squeezed, just not as often, and I'm still going to get squeezed. It's just part of the game. But if we can minimize the damage, that's a really good spot to be in. And we can't do it by ourselves. We need to stay objective, and we need the data. So this is why keeping a trading journal is paramount, in my opinion. I believe that when we are looking at a million things, we can kind of let things slip or slide. They kind of go in one ear out the other, and we may forget about a very important key piece of information. But when you keep a trading journal, you can reference it and say, hey, you know what? I noticed on BYND and EOTK and whatever, JMIA and, these recent plays, I noticed that the stock does this all of these times, or maybe 80% of these times, 70% of these times. Okay, that's something I want to watch. And that's how you formulate a winning edge, is you start to track everything, okay? But then you start to notice similarities between these stocks and their movement. And you can say, okay, if I see this, I know something's not right. Or if I see this, that's exactly what I want to see. And then, well, why is it exactly what I want to see? Well, I can see in the data here that when the stock does this, this, and this, it usually does this. Not 100% of the time, but most of the time. Right? It's more likely to do this than it is to do that. Okay? So that's how you start to formulate a trading plan. And the same thing can be said for losers, which is what's really important in my book, is identifying what's going wrong. Because every single person in this room can make money in the stock market, okay? Every single person in this room can make money in the stock market. But keeping the money that we make is the actual battle. Okay, it doesn't matter what we make, it just matters what we keep. And losing my train of thought here, because BYND is breaking down pretty nicely here. And this is not enough yet for me to just hit $90 a share. This is not enough yet for me to just you know, slam the bid, if you will. This is, I like to see in my own trading, I like to see, let's start off with the high, right? This is just a very general overview of what I like to see when I'm spotting weakness. So I always like to see a lower high, okay, at a designated fib level, okay, that's usually above the 50% retracement. I'll talk about that. I'll build on that in a bit, but I'd like to see a lower high. I'd like to see the lows taken out. So I'm always marking swing highs, swing lows as very important areas of support and identification. So right here, plain as day, I can see that 94.14 area on BYND was a huge line in the sand for me. Why is it a huge line in the sand for me? Well, we tested this area at 10.06, and also we tested it at 10.17, and we tested it at 10.21, and then it ripped above it, and then of course previous resistance becomes support, 10.35, and it kind of hung around in that area, and then it slammed below that area at 10.45, and guess what? Previous support becomes resistance, and then we came up and tested it perfectly. You could see how this 94.14-ish area comes into play multiple times. That is a huge area of interest for me, okay? Another one that I'm really looking at, 92.29. We see that price has spiked there at the open. It has failed at that area, then it reclaimed. It bounced around that area, failed, rejected, reclaimed, bounced, and then it came below as a failure, and then it rejected that area again. These are areas that you can see through price action that are very important areas of interest on a stock. Price action always leads the way for everything that I'm looking to achieve in the market. I'm not I don't trade based on fundamentals, although I do think that they are very important. I still believe that price leads the way. Okay? You have the best company in the world, okay? If it's tanking, just creating new lows, from a trading standpoint, why would you want to be buying it? You could have the worst company in the world, like we see very often. We could have these small cap companies that are literally zeros, or if you actually take into account the amount of debt and lack of product or technology, they're less than zero, right? I mean, they're not even zero. I mean, it's like this thing is just literally like, this belongs in the graveyard. But, there it is, $30 a share. Maybe 30 is a stretch. There it is, $15, $20, $25 a share being pumped. And, price action leads the way. It could be the worst company in the world. Why are you shorting it if it's not showing any signs of weakness? As we can see, it's very rare, but we can never say never in the market. We can see things like dries, for example, right? I mean, you guys remember dries price action. You guys remember the huge dries season, if you will, because it wasn't a day, it wasn't a week, it was really the shipper movement. And man, dries was a huge learning lesson for me. Now, I didn't get destroyed on dries, but the only reason that I didn't is because I wasn't trading dries day in and day out, because I was learning about dries. I thought the dries was so magnificent. I saw people on Twitter and some friends of mine banking on dries. I saw a lot of people make a lot of money on dries, like Alex, AT09, for example. He made a ton of money on dries, and I thought that was awesome. I thought that was so cool. I thought that if a stock can really rip that far, and that move, that sector can be fueled for so long. I was like, man, this is like I was licking my chops. I really wanted to study, not only front side, but the continuation of a sector. You know, I really wanted to see what is really holding these things up, when do they really break down, and I've gotten pretty good at that. So definitely, I still get squeezed. I still make a ton of mistakes all the time. I definitely don't have it all figured out, but over the years, tracking trades, keeping a journal has been paramount to me not getting hurt on a stock like BYND today. You know, we're flirting with $100. The current high, 96.78, and you know, you really have to formulate a very winning and proven approach if you're going to be a short seller on a stock like BYND, because there are just so many easier things to short than a stock like BYND. And I think everyone can agree with that. You know, even some of the best short sellers around, you know, I'm sure that they're taking a feeler and starting in and then saying, okay, something's not right, getting out. You know, they're very quick on their feet on a stock like BYND. So how can I help you guys in your own trading journey? How can I help you in your own plan? Let me know if you guys have any questions about this week. Let me know, how are you guys liking the lunchtime recaps? I started that this week. Are they helpful to you guys? Do you like them? Let me know really anything. What's on your mind, guys? BYND, I'm definitely not convinced that this is over. ELTK, I'm also very interested in ELTK because it's holding up surprisingly well. You know, we had ELTK started ripping, very low float. Some were saying that it's under $1 million. I didn't check on that, but you would think that the see, when you have very very high floats, you usually see this thick price action, if you will. And when you have very low floats, a lot of traders tend to avoid them because they can really move on air, and they can really they're very thin. And I was expecting that on ELTK, but we actually got the opposite. So like I always say, nothing's 100%. You know, this is supposed to be a very low float, and it just isn't acting like it's a low float. It's acting very grindy and choppy. And I think that it's interesting that it's still holding up here. You know, obviously it's not at highs. The high is 310. We're sitting at 270 right here, but it's much different than the action that we usually see. We usually see a big spike and a halt. Okay, it did halt. Then it unhalted and it kept ripping higher. Okay, that's still in the realm of normality. And then it topped out at 310, and it faded off to 253. It put in basically a double top, 310, and it faded off again. But we don't see that huge crash back to 2 like we normally see, especially in summertime, because summertime there's not a whole lot of volume and liquidity to base trades off of, and for moves to be sustained like this. So it still has it's low volume, but it's not as low as some of the other things that we see. So I'm keeping it on watch is what I'm trying to say. I definitely want to keep it on watch. I don't want to write it off yet because it is somewhat holding up. As you guys can see, one of the major levels on BYND is coming into play here. That's a 92.05 level. That's interesting to note. Remster says, that's right, can't say it can't go any higher or it can't go any lower. No, absolutely not. No. I'll tell you what, guys, if you are saying it can't go higher or it can't go lower, you obviously have not been exposed to stocks that go from whatever, 10 to 100, or, you know, like a Dries, for example. What did it get to, like, what was the high on Dries? Anyone know? It was well over 100. It was in the hundreds. What was it? Wasn't it like almost 300? Yeah, that's what I thought. No, it was higher than 115. I mean, I vaguely remember it. I just remember it for its glory, but I don't remember. All I remember the last day of Drive, it was like between 2 and 300. I want to say the upper band of that, and then wasn't there like an offering? No, T12, right? It was a T12, and then it opened at like, you know, who knows? Yeah, thanks for the confirmation, guys. I vaguely remember, you know. Yeah. Yeah, and then of course TLRY, Tillery, and that's another really, really, really great example of why we can never say never. You know, sounds so cliche. It's like something you read off the back of a cereal box. Never say never. No, but really, you just, you know, as a data-driven trader, that's, I guess, what I would consider myself. And we all should be data-driven, but I'm very heavily data-driven. Everything that I do has got statistics for it in the market. We can never say zero. You know, the math community, they don't like to say zero or impossible, 0% chance, or it's a total, you know, what they usually say is more of like it's improbable or it's very unlikely. But impossible is really kind of like taboo. You just don't say it because you can't quantify impossible all the time. And when you have something like the market where I'm not in control of it, how can I ever say zero, right? You just can't. So it may be 1%, but it may not be zero. And that's what you always have to remember. You know, there may be a very good chance that something is going to rip or something is going to tank, but nothing is ever 100% or 0%. Those are, that's an environment that just doesn't exist to me. So that's something to take note of. You guys are posting charts. Thank you so much for posting. All Day A is new to the room. He's been helping out. He's been sharing a lot of his large cap stuff, a lot of his primarily long-based trades, and it's great to see him here day in and day out. And guys, don't forget to message him and let him know what kind of great job he's doing. 1337 posted a chart. Let's check this out. It says 100. Wasn't Dries at 300? Come on, guys. Dries was over 100, man. You guys are going to make me pull up, the TD won't show it because of so many splits. Doesn't look the same anymore. Who can confirm? Where was Dries at before they T12? I could ask Twitter. I mean, I'll get 20 answers in 2 minutes, and only 3 of them will be talking about Dries. Twitter's great, man. Thanks for sharing the charts, guys. There we go. Oh, that's Tillery. Tillery was 300. Okay, who knows? You know, we'll have to figure this out. I'll get back to you guys. I'll post it. But no, but my point still holds true. You guys just can't say never. It's just not a good environment to be in. You know, even if everything is pointing like it's gonna fade, and you know, there's no volume, there's dilution, there's all kinds of nasty, toxic financing and other shit. You just never is really a dangerous word. You know, so that's something that I had to eliminate in my own trading. There it is, dry is $120. Okay, so I was getting dries and Tillery confused, right? I knew one of these shitheads was at $300. Thanks for posting that all day, A. So guys, let me know if you guys have any questions for me. If not, we're gonna wrap this up. We're gonna drop it on YouTube and Twitter for the peeps. Yeah, Elfin, another one, definitely. I did not forget Elfin. That one was just a little bit different. Yeah, RKDA, another crazy one. All day got caught in the halt on Elfin. That's nasty. Yeah, Elfin was pretty nuts. Elfin looks like 142 high. Holy moly. That is so crazy. Elfin from $39 to $142 intraday. Yeah, that's definitely never say never, right? Yeah, of course, BPTH. Yeah, BPTH was really fun. That's another one that I'm very grateful I did not get destroyed on. It's just about trading inside of your edge, you know. I don't have any edge on stocks like BPTH. When I see it, I know automatically volume is insane. There's no resistance anywhere on the chart. Even if there was, this thing is so strong that it probably won't even respect it. It's just like, it's not an environment to operate in unless you really have the data to prove. See, that's why I just don't believe in stuff like that. You know, you can really save yourself a ton of pain and headache and frustration and potential losses. You just wait for the breakdown. But trying to pick the top on the way up, very dangerous game. And I've been there, I've done that. You know, I've gotten into a lot of trouble doing that. So definitely be cognizant of that. So guys, if you don't have any questions for me, I'm going to wrap this up. Still looking at BYND, still looking at ELTK. I think that BYND is it's going to be in play for, you know, another week or two, maybe like this. But once it cracks, you have the whole backside, and then you're going to have spikes into that, and it's going to be fun. So thank God for BYND. Whether you're a long or a short, small cap land is dead, and BYND will probably give you some opportunity to make some trades on. So I'm grateful for BYND. Hopefully we can just continue to be patient and manage this properly while it really confirms a breakdown. Because remember, it is pretty far off the highs. It's still green on the day. And, you know, when you see a stock, $92 per share, really anything could happen. These things can squeeze much further than a small cap. You can't treat them the same. And yeah, I guess that's it for me today, guys. So I hope that you guys have enjoyed these lunchtime recaps that we started. Like I said, reach out to All Day A. Let him know what kind of a great job he's doing, because he is doing a great job. We value his insight and opinion. And if you guys enjoy these Micah Yo shows, please leave a thumbs up on the video. It really helps out. And if you need anything, you can always email me at, if I could type here, mike@madasmoney.com. You can also right-click my picture or my handle, and you could message me there. It's got a lower float. 53 million float is tiny when you consider the big fish in this game. Yeah, there's a lot of money, and there's like a lot of eyes on this as well, because we really don't have a market with a ton of volume. So when you see a stock like this, definitely everyone is speculating on it, and that's something that's good for us, right? Because the market's dead. Punch Drunk, you never got back to my Twitter DM. I don't think I saw it. Full disclosure, I get so many DMs. It's better to reach me in the room if you guys are in the room, but I will check on the DM and I'll get back to you today. Okay? So guys, thank you so much, and thank you for your patience, Punch Drunk. I value all you guys, and I thank you for being here inside of Mad As Money, and let me know how I can be better for you guys. Just send me an email, and we'll end it here, okay? Thank you all, and follow your trade plan. BYND, moving forward, keep an eye on it. Cheers.